Scott. Thanks so much for allowing me to be part of the podcast.
Most people speak on their throat.
I think you'd be a superstar in the banking industry.
We have not seen any dead bodies in the dumpster.
Tell us one of the dumbest, stupidest things you've ever done in your business career.
You have entered the world of accounting, the place where business dreams and financial reality collide into exciting things like journal entries, debits and credits, and financial statements. Everyday CPA Podcast, helping you and your business better compete, succeed, and win.
This is part 3 of a 3-part series.
Greetings, this is Kelly Coughlin, CPA and CEO of Everyday CPA, providing tax, accounting, and revenue solutions to individuals and businesses throughout the U.S. In today's podcast, I'm going to interview a former grizzly bear. Yep, in a former life, for 30 years, he was a grizzly bear who took the shape of an IRS officer, seizing assets and pursuing DOJ tax lien foreclosures. David Ronquillo began his career as a revenue officer in 1980 in Seattle. He's held positions as field collection group manager and senior collection policy analyst. Currently, he's helping tax professionals increase their knowledge and skills representing clients who are dealing with the IRS collection operations. David, I want to welcome you to the Everyday CPA podcast. I have a couple more questions on kind of the behind the scenes dynamics of the collection area. One is, what are some of the motivators or behind the scenes incentives that influence an agent that works on these cases that work in favor of the taxpayer, and certainly which ones don't work in favor of the taxpayer? I'm thinking, there is a pressure to close a case, to get it off the table, right? We've heard all that. Is that a fair statement? That there is the pressure to get things closed, right?
Right. Does
that pressure help the taxpayer or hurt the taxpayer, or is a neutral?
It can depend. I can see it go both ways. For example, if it's an egregious case, the way that they ran the tax up, trust fund recovery penalty is a classic example. IRS may spend more time on it digging for assets or digging for a way to collect what is owed, simply because of the way the tax was generated. Or, how cooperative do they do what the revenue officer asked them to do? Or, they're going out to try to refinance their house. So in those instances, the case in IRS, they can't classify cases as overage. It used to be 9 months. If the case was older than 9 months in the inventory, it was overage. So then management starts looking at it a lot closer, trying to figure out what do we need to do to close this case. But if it's a good enough case where it should not be closed, the IRS isn't going to close it. On the other hand, if it's a simple payment agreement, taxpayer owes $1040, they can make monthly payments. Case is getting old. Hey, let's get the payment agreement written up and let's get it closed. Let's move on to something else. So the pressure on closing the case can work both ways. It just depends on what the circumstances are. In dealing with a revenue officer, I always take the choice, because I hear these advertisements, on the radio. Oh, yeah, we do battle with the IRS. We fight the IRS, this and that. I don't fight the IRS because it's not effective. When people would fight me or fight my revenue officers, it was never effective, because I used to tell taxpayers when I was a revenue officer, you don't want to cooperate, fine. I'll clear my desk and I'll just have your case on my desk. I'll spend, all my time on it trying to figure out how I'm going to collect from you. Okay? So because you have an interaction with another individual, another human being, and people like to be treated, well, like to be treated nice. Revenue officers are the same way. They go home from work, to a family dog, they're regular people. So I always advocate, try to solve the case for the revenue officer. If you know what the rules are, the procedures are, what the Internal Revenue Manual is called for, work the case, within those parameters. If they owe tax, you know that the revenue officer is going to want a 433A, a financial statement, or if it's a business, 433B. You know what the standards are. Don't ask the revenue officer to grant, $5,000 expense for mortgage and utilities when the standard for the area is like $2,000. So work to resolve the case for the revenue officer. That way they don't have to spend as much time or concentration on your case. Be cooperative. You got a deadline, try to meet the deadline. If you can't meet the deadline, at least call the revenue officer ahead of time and say, I can't meet the deadline and this is why. And generally, they'll extend the deadline. Don't argue with them over issues that are not important, okay? My example, the mortgage and utilities are $5,000. The standard is $2,000. Why are you arguing with them over that? You probably won't get it. I mean, you can put up a little bit, about, well, here's all the utility bills and, this is why. But I would much rather spend my time arguing with a revenue officer over something that they did wrong rather than something that I know my chances of winning are slim to none.
You keep referring to the revenue officer. What's the hierarchy of IRS case management? The point of contact with taxpayer, and parenthetically, I'm going to assume that you recommend in most cases that a taxpayer get help from a professional that knows how to navigate these areas. Is that a statement?
It is. It depends on the case. Depends on how much the taxpayer owes. If the taxpayer owes $5,000 and they can pay $500 a month, I just tell them, hey, call the IRS up or send in a letter to the IRS that you want to make a monthly payment agreement. If they owe, $50,000 or, $150,000, and then that's a lot different, and then it depends on what they have. Taxpayers, what I've seen, they don't want to spend their time trying to deal with the IRS. They don't know how the IRS works. They don't know how the IRS thinks. They don't know the IRS language, and they don't know what the IRS can do to them. And, I've seen, I've had taxpayers come to me after they've dealt with the IRS, and generally they have a deadline put on them. And now it's, they want me to fix the problem. And it's like, well, you got a deadline from the IRS, which is in 3 days, and you expect me to do all this work for you. And if the work is not done, if the financial statement is not submitted, they're going to levy. I can't guarantee you that I can do this. My recommendation to taxpayers is do not contact the IRS. Generally, if you owe enough money, you don't feel confident in dealing with the IRS, contact a professional that knows what they're doing, knows how to deal with the IRS, because you'll probably sleep a lot better at night rather than you trying to deal with the IRS.
And if you're a tax professional and you don't know how to navigate through this side of the IRS area, the collection area, then that's your focus now in your business enterprise, correct? You're helping tax professionals navigate through these waters?
Yes. I am going to stop representing taxpayers simply because I've done it for close to 40 years. And what I'd rather do now is just simply act as a consultant to tax professionals. If they have questions, help them, develop strategies on particular cases. I attend the National Association of Enrolled Agents conference out in Las Vegas, every year. And those are good conferences, but what I see happening is that you have folks coming in and they're want to learn representation to, add it on to their practice, which is good. But you sit there in a seminar for an hour to an hour and a half to 2 hours, for example, on filling out a financial statement 433A. That's really, in my opinion, not enough because there are implications to what you put down on that 433A. Anybody can fill it out because you're just putting down numbers. So if you write down, for real estate, 3-bedroom, 2-bath residence, that its fair market value is $500,000 and the mortgage against it is $100,000 for equity of $400,000, you have to know how is the IRS going to look at that $400,000, especially a revenue officer. You just can't submit that 433A and say to the revenue officer, here it is, and have yourself wide open, or not prepare your client that revenue officer is going to ask you to go borrow. So let's get started right now.
Right.
So, the seminars are good, but until you really get out and start working cases, offers and compromises are another one. The acceptance rate on offers and compromises is just under 50%. I don't submit a lot of offers, but every one I've probably submitted maybe about 10, 15 at the most. Everyone's been accepted for one, and that's because she went and got a job. You have to be really, really careful on what you're doing so that you can achieve success for your client. So my plans now going into the future is, do consulting work. People want to call me up. This is what I got. This is the type of case. I can, kind of walk them through it and, try this, and this. And if that doesn't work, let's try this.
Right.
And just, basically be a coach is what I want to do.
Yeah, got it. So back to that question, the hierarchy of case management, you got the revenue officer, the next level up from that, like his supervisor. What do you call that?
That is the group manager. And that group manager is going to supervise anywhere from 10 to 15 revenue officers. Above that is a territory manager. That was my last position, was a territory manager. And they are supervising anywhere, well, nowadays, because the personnel has shrunk, 5 to 10 groups. And then above the territory manager is the area director. And he or she is supervising. They have states. Like here in Texas, we are part of the Gulf States area. The area director is in Houston and Gulf States. They did some reconfigurations, but it used to be Texas, Louisiana, Alabama, Mississippi, Georgia, and Tennessee, and I think Arkansas.
Okay. So at the revenue officer, let's say we've got a revenue officer that says, I want to go after retirement assets. I think earlier you said they have to go up 3 levels. So does that mean he goes to the area director or the territory manager?
Goes to the group manager. Group manager forwards it to the territory manager, who forwards it up to the area director. Every area has what's called a technical analyst. And this person will review the case for the area director, looking at the technical aspects of the case. Does it meet the requirement for whatever the revenue officer is asking for? And if the technical analyst says, yeah, this is good, they will give it to the area director, and then he or she will sign off on it, and they'll go, come back to the RO and they'll levy.
All right, that's retirement assets, and then the personal residence. Same thing, but it goes up 1 level above that, did you say?
Yeah, it'll go up through the area director, and then it goes over to a special unit called advisory. And these are senior revenue officers that will look at the case, again, for technical issues. Does it meet the legal and technical requirements for doing the seizure? The case will then move over to IRS counsel's office for review. They will review it for the same thing. They will then forward it over to the Department of Justice Civil Tax Division for the DOJ to take it into federal district court, to get an appointment, take it in federal district court.
Okay, that's very helpful. I have 2 final questions, unrelated. Well, you're talking about OIC and some of these other tactics that are used to deal with liabilities. Let's talk about CNC, currently not collectible. Once a tax liability goes into CNC classification, that kind of puts everything on hold. There's no more collection activity. When does it get further attention? It won't stay in there forever. What's the catalyst to get it out of that? Is it a tax return that gets filed, and then the IRS notices, oh, this guy's making 10 times the income now? Is that more or less what happens?
That is what happens. The IRS, when they CNC a case, they will set an income threshold. And it's in the Internal Revenue Manual on how they calculate that. What they're looking at is necessary living expenses. and they set the threshold, a little bit higher than what the necessary living expenses are, because they don't want the cases generating out just because, a taxpayer went $5 over, what their necessary living expenses were. But they'll set a threshold, and then with subsequent filed tax returns, the income will be matched up against what the threshold is. And if their income is now greater than what the threshold is, the case will be regenerated out for collection, because the assumption is the taxpayer's making more money and now they can start paying towards something. If the taxpayer never exceeds that threshold, the case will never come out. The statute will expire, and that'll be the end of it.
Right.
So,
okay.
And even I think if the taxpayer doesn't file tax returns, it won't pull it out of CNC status. But what will happen is the IRS will be asking for the tax returns, which is a whole nother area to go into. But
yeah, right. Okay. All right. Final question is on internal collection versus external collection. Part of these ads we see on TV is the IRS has hired a bevy of external collection agents that will really go after you. If you think your life was bad before, it really will be bad now. What are the facts on that?
Now, there's a big controversy with these private debt collections. The National Taxpayer Advocate is definitely opposed to it. IRS management, they tried this a number of years ago because they want to assign the low-hanging fruit, the cases that they cannot collect, the CNC cases, to these private debt collectors. The most that they can do is make a phone call, try to locate the taxpayer, make a phone call. But when it comes to actually resolving the case, say, for example, it's a CNC case, private debt collector gets in touch with them, and the taxpayer says, well, okay, I want to pay $100 a month. That case has to go back to IRS. IRS has to set up the payment agreement. They have no enforcement authority. Basically, they're just trying to talk people into paying what they owe, track them down and pay what they owe. Internally, it's like you said at the beginning, the brown bear can chase them up the tree, or the grizzly bear can just rip the tree out. That's what IRS can do.
Yeah, right. Well, that is terrific. So your market now is to help tax professionals help other taxpayers with tax liability issues. How would you like them to get in touch with you? Telephone call, email?
My email is David at DFW Tax Help. That's Delta Foxtrot Whiskey Tax Help, HELP, .com. I have a website, DFW Tax Help .com. Phone number is 214-997-4470.
That's great.
And people have questions, and I'll tell you, NAEA just came out with this forum where people can post questions, and I look at that sometimes, and people will post a question, on collection issue, maybe something on an offer, and then various people will respond, and I look at that and I think to myself, the person that is asking the question is maybe getting 2 or 3 lines of an answer. And a lot of stuff in collection, there's permutations to it. There's different nuances that can occur. You can, plan to go down one path, and, you have to know what's down that path that can mess things up. So I see that forum is good for a quick, short answer. But if you really, really want to know how to handle a specific situation, you really need to talk to somebody that, is familiar with the situation, that can give you some good directions and good ideas on strategies of what to do.
That's terrific. Well, David, I look forward to having you on my team to help me and my customers deal with this, because I think you're a terrific resource to have. And I'm glad that former grizzly bear is in my corner and helping me. I like that.
I like that. I'll have to tell my colleagues that are still with IRS. That's Terrific. Well, thank you,
Okay.
Kelly.
Thanks.
All right.
Enjoyed
Thank
talking
you.
to you. Great. Bye.
All right. Bye-bye.
Thank you so much, Kelly, for having me. I really appreciate it.
Kelly, thank you very much.
Thank you, Kelly. We'll talk soon.
Thanks for tuning in to the Everyday CPA podcast. We will see you next time.